Hello, it's Moshe's Biz here, and just a short video to answer the question of one of our community members who I think has a very relevant question, as many members who are new to Navy Federal actually asked the same question, and I just could not find some of those questions that I wanted to share here. But this gentleman, Paul Griblick, was asking, I'm confused about the rest of the payments. If you pay 90% off right away, if you get a 10%, $10,000 pledge loan for 5 years and pay off 90% of it right away, is there still 5 years of payments at a 10% of what they originally were? So this is how a pledge loan works. Okay, once you pay off the 90%, let's say of that $10,000, then about $9,000 has been paid off. Then 10% of that plus 2+%, which is the interest rate, remains as a balance for your pledge loan for 5 years. Okay, but you do not have to pay for the rest of those 5 years except when it is close to the maturity date. And on your app, you usually tell you how much is due and when. So that is usually further closer to the end of the term of your pledge loan. So what you basically did when you paid off 90% of that loan is that you just paid in advance. Okay, and that's the reason why you get those on-time payment reporting to the credit bureaus for the life of that loan, because you have paid in advance of that 90%. It is an installment loan. But of course, it doesn't mean that you do not have the option of making smaller payments if you want to throughout the life of that loan for the remaining 10%. You can still do that. But the only thing that you should not do is pay it off, like pay off the whole amount that you owe from that pledge loan, or else it will just report as a closed account and you lose the benefit of the on-time payment reporting to the credit bureaus, which is what we are after anyway, to boost our personal credit profile and internal credit score with Navy Federal. So thank you for watching, and I will see you next time.